Today, I'm adding a hot stock to our portfolio that should give us safe passage in these treacherous times of investing. This is not financial advice. This is for entertainment only. The stock I'm adding is Disney. You can see my entire list of hot stocks to buy in a pullback at the end of this video. Disney has 116 subscribers to their online streaming service, while Netflix has over 200 million paid subscribers. But Netflix has been in business for many more years than Disney, which just recently upscaled their streaming service. Disney is a media giant as they own ABC, Hulu, and ESPN. They made $2 billion on their media. Disney owns the rights to Lucasfilms, which made Star Wars and Indiana Jones. Disney is no Mickey Mouse business, as they are one of the 30 stocks which comprise the Dow Jones Industrial Average. Owning this stock could help turn your portfolio around and make your life more of a Cinderella story if you've been oppressed by your mean stepsisters or stepbrothers. Much like Apple, Disney has many devoted followers and believers in their products and attendees to their parks. I know people that make it like a yearly ritual in a normal year to visit the Disney parks, that this is the highlight of their year. Last year, Disney sold $1.5 billion of consumer products related to the Disney theme. In 2019, Disney bought 21st Century Fox for $71 billion, adding to their massive entertainment storage. Their parks have reopened to at least a limited degree, and will open more, of course, as things return more to normal, which will mean only more profits for Disney. Disney just has a history of making very smart investments. In 2009, they bought Marvel, which was a boon for them. Disney also bought the rights to Sony's Spider-Man. I mean, are they going to own all the superheroes pretty soon or what? Netflix charges around $15 for their streaming service, while Disney charges about $12 or so for their streaming service. If they increase their monthly fee by $1 or $2, it means a lot of extra income coming in for them. When one thinks of Disney, one cannot help but think about all the imaginative projects and films that they've created. It was formed as a company in 1922, and I'm just trying to think how wild it must have been for Walt Disney to go to people for funding and say that I have this idea of creating this mouse character with his wife and having these entertainment parks, and how massively successful that's going to be. That must have sounded like something just out of this world back then. If we look at the one-year chart on Disney, recently after the release of their earnings, it shot up to about 187, 190, somewhere in there. But recently, on Friday, it went down to 180. It's been as high as 203 in the last year. So right now, after positive earnings, we've seen a pullback, and that's my definition of a time to buy. I think probably the ratings and the expectations of what the stock would do are underestimating the stock. The stock reported positive earnings during the difficulties we've had for the last year. We know that's going to change. We know that's going to get better. I think most of these predictions are very much underestimated, and even the underestimates at the lowest, they expect it to be somewhat higher than it is now. If we look at the one-day chart for Disney, Friday the 13th, it's only fitting that it was Friday the 13th that it went down 7 points, even after positive earnings, when they've done a fantastic job in carrying on in spite of the unprecedented difficulties they've been having. A lot of their money, in fact, most of their money, I believe, comes from their parks. And the parks have been operating under very limited capacity, and they've been able to get through this and make wise decisions for the future. It's probably made them more likely to be profitable in the future because they've cut expenses. And I think it's being underestimated heavily. Of 19 analysts at tip ranks, 16 of them rated a buy and only 3 of them rated a hold. Nobody rates it a sell. And so this gives it a rating of a very strong buy. The average rating at tip ranks say that it would do $212 within a year, and it's got some higher than that and some lower than that. But even the lowest one, 185, is higher than the price is now, and that's the extreme skeptics, we want to say. So this is a stock that's managed to do very well under very difficult circumstances. I think it's just being totally underestimated, the difficulties they've overcome, the amount of positive streaming services and content and properties they have in their system is awe-inspiring. I think once the country returns to normal in a year or two, who knows? We're somewhat returning to normal now, but I think a year from now we'll be just about 90% normal, and 2 years out, I hope we're back to normal. And I think within a year or two, depending on how things go, we'll be seeing a price more in the line of $250. And I think the analysts will be moving up their predictions steadily. I think it's possible and even likely that this stock could double in a year or two, which makes it a hot stock, which I'm adding to my list. And you can see the entire list at the end of this video. Nobody bats 1,000, but if you look at that list, you're going to see a lot of stocks that have really popped lately. So it's definitely a list to be consulted in a pullback. And there's been some big time winners like Moderna, which, you know, I've gone in and out of that stock. It ran up so high that I've pulled out of it, but I made just an outstanding profit on that. And there's other stocks on there that are doing well too. So the list as a whole, I think, is very sound, and I think it could be to your benefit if you like the way that I invest. I do believe in high growth, explosive stocks. I like that. I think that's where it's at. As they used to tell me in karate, you got to go where the punch is. And I think explosive stocks that start to take off are where the punch is. I think Disney is sort of sleeping and it's coming out of its slumber. But I think once we're back to normal, look out, this stock is going to really go places. I'm not a financial advisor. This is not financial advice. I'm just describing how I like to ride markets. And here's my list of hot stocks that I like to invest in for now. Remember that I like to buy these stocks when they're pull back. And remember that some of them are swing trades and some of them are longer term. and I discuss that in most of my videos.